What's up, guys? Let's do a little options talking. If you guys trade options on the daily or on the weekly or however you trade them, leave a comment down below and let me know what you guys are trading and if any of my content has been helpful at all lately. And this is I'm just going to go over a little bit of what I do and how I have been remaining pretty profitable lately on trading options. So hopefully this can be helpful to somebody. I did so much option trading in my life, and honestly, before I got pretty decent at reading charts, like I'd like to say I'm pretty decent, I failed at options, constantly failing, and blew up many accounts trying. And what it was is I was just not really paying attention to what was going on, or I wasn't taking my profits at the right time, and I didn't have a very good strategy. And I think that's the key to success in options. And also another big thing is having your in level and having your outs and knowing when you're wrong, knowing what level are you going to get the hell out on and what level are you going to take the profit on, and also not thinking too big, because the biggest thing as well is you could buy an option on, Apple thinking it's going to go up and it goes down and you're like, I'm just going to hold it because eventually it'll go up, and it just keeps on going down and you're losing all kinds of money. And then by the time you're down $200-300 or something, you're like, I'm going to close it. And then before you know it, it fucking rockets back up, or however it is, whatever. Apple's not as hard to trade in the sense of it doesn't go down usually very fast. It's pretty slow mover. But anyway, I don't want to talk too much. I just want to talk about range trading. So if you're not okay, this is the first thing. Anyone can option trade. The key to it right now you have to remember, obviously, in the bigger picture, when you're doing your taxes at the end of the year, if you're going to do this style, you have to remember that most likely you are going to have to pay a big chunk to Uncle Sam. I have not dealt with that yet, so I am trying to keep that in mind. The second thing is the day trade. So a way to get around the day trading thing, because I don't have 25K in my account. So the thing that we have to remember is when you don't have 25K in your account, you only get X amount of day trades. How do you get around that? You switch into a cash account. Now, the thing with a cash account here is when you're in a cash account, if you're going to trade stocks, say you buy Apple today at 157.78, and you decide I'm going to sell it up at whatever, 168, whatever price you want to sell it at, or you're going to just sell it here you're going to swing it from here to here in this channel. If you sell it the same day, you don't get a day trade or anything, but you have to wait for your cash to settle. If you held it for 2 to 3 days and you sell it here, you have to wait for your cash to settle. You don't get any of that cash back until 2 or 3 days later. With options, if you decided, I'm going to open up a swing long on Apple when it gets down at 157.77, if it decides to hold here, it shows a nice solid bounce area, which actually it's coming into there's a potential double bottom here if that does play out tomorrow, 57.77 to 57.88. If it comes here and it decides to rock and roll and it shows a nice bottoming formation, you take the break out of a specific level and you buy a call, and you buy let's say you buy a 159 or 158 call, and you get it to run all the way up here to 160, and you take the profits the same day. That's my level. Or you bring it up here to 160.73, the range trade, and you make $200 or something, and you sell it the same day. You don't see that cash in your account. It'll go away, but the next day you get it back, all of it. So that's kind of the way that I've been going around. I know I just talked, and maybe I rambled too slowly on that, my bad, but you get the cash back the next day, so you can day trade it and get it back tomorrow. And that's how I've been playing options lately. So that's my way around it. So like today, what did I do? I traded Baba. That was one of my plays today. And what I did was we opened up in the morning and we were at roughly, around this level or so. And I was like, you know what? I think this is going to run up into my box, the same area it's been rejecting. This is where we rejected last time, 88.38. And, without even having to look at the damn chart, because I just know how Baba's been, I was like, I am going to grab two fucking $88 puts expiring. I don't know what I did. Whatever it was, March 31st, maybe April 6th, something like that. And I just know that if it does decide to start closing candle bodies above this level of 88.05, 88.06, and it starts flagging up here, then I know that, hey, if we now pop up here and start consolidating, I am wrong. So I was like, you know what? I'm just going to punch right in, and that's where we're at. So I didn't think about this trade the day before or anything. I just remembered my levels. So I was like, 88, short. So that's what I did. And then I was like, wait, I should probably go look at the fucking thing and see if it's consolidating up here or anything before I get too much into it. Took a look and I'm like, oh, we just like wicked up there. Then we fucking broke, whatever. So I was like, all right, well, I can hold this down. And then it's like, where's your next level? You have to know your levels, of course, because that's how options is. It's not usually as easy as just knowing your level and punch in. Sometimes it is if it's a big range that you are confident in. But like in this case, not the best example because it was kind of just like I'll just punch in here because I know this level. It doesn't usually work like that. But it did work in this sense. And then I knew that it came down to about 88.50 to 88.30. So, I did close mine a little early. And that's just because, like, my long-term mindset right now is that Baba is very bullish. So I'm just kind of shorting it up in this range and letting it drop and kind of taking profits a little bit before. Now, I'm not saying this is going to work every time because most stocks, when they're in a channel, they're going to break that channel at some point. And for me, I actually, at the end of the day, not the end of the day, I'm sorry, in this consolidation here, I decided to take a long on Baba right here at 85.56 area. And I just did a very cheap option just because I had already done my trades for the day. I used up all my cash pretty much, and the only thing I had left was like $80 in my account. Tomorrow I'll get the rest of it all back, and then I can do another trade tomorrow or multiple trades. But this was one of the trades that I did today was this one, which I closed down here. We talked about it earlier. And, then I just bought a cheap option call because what I've been noticing for Baba is for some reason is like every day so far, it's opened up here in the 88.30s. And it's closed down here in the 85s. So that doesn't mean it's always going to do that. This was like kind of my thought was we're down in this level. We've pretty much had a triple top on Baba, 1, 2, 3. But Baba still did not fail this 85 level. So with that thought on its own, and this isn't a triple top on like actually, look on the 15-minute, you got a triple top. Yeah, I mean, maybe it is a triple top on like a pretty much every time frame, okay? That's not very bearish. I mean, that's not very bullish. But what is potentially bullish, and I'm not going to say too much yet because I don't know for sure, is that if we do not break down from this 1, 2, 3 tests, then that could signal more bullishness in Baba just for the fact that it withstood a triple top. And that would mean the buyers are definitely stronger than the sellers. And, Baba has had a lot of downtrend. Like, I was potentially talking about Baba being bullish over here if we could break above a certain level. And I think it was, I don't remember what the level was or where it was, but it was somewhere right here. I was like, we have a flat bottom here at 102 and then a flat top at 105-ish. So I was like, if we can pop above and close candle body somewhere up in this area, 107, 108, we could potentially look for a long play, which it didn't end up working out. Then it turned into something different, which is just a giant falling channel that it did break that downtrending resistance from. And now we are just trending in a damn channel. So these are the channels that can make you a lot of money in options trading, and a lot of stocks are in these channels. And if you sit there and try to hold them for the breakdown, you usually end up losing your money. And that's the thing. This is like the biggest thing I'm trying to teach here. And that was something that I learned on NVIDIA the other day, which is why I was talking about that in my video on the short idea on NVIDIA today, was that I wasn't going to make that same mistake. And what the mistake was that I made, if you guys watch my videos constantly, then you might have heard what I did. But what I did was, I think it was maybe, oh yeah, it was over here. I shorted up here. Wait, no. Oh, it was right here. Okay. Over here, I shorted here. Or maybe it was this back test. Was that? No, that was today. What the hell am I thinking? Maybe it was something in here. Oh, I shorted in here. We had this huge down push. And I shorted somewhere in this consolidation. We fell down. We back tested, whatever. And we fell all the way. Yeah, we fell all the way to 63s. Now, okay, sorry. I was losing my train of thought for a second. So I'm like, I was getting confused for a second. I'm like, where the hell did I short? So I was sitting here like, it's going to 261 because of this trend line. So my mind is it's going this level. And that's the stuff you have to realize doesn't have to happen. Just because you want it to go to 11 doesn't mean it's going to go to that level, and it doesn't mean it's going to go to that level today. And when you're trading options, you can't be greedy like that. You have to like have your level. Like you have to pick a level that it's been to before within that last week and be like, this is where I'm going to take profits. I don't care if it's going to go lower. I will re-enter the trade if I have to. And that's the type of stuff. So knowing that NVDA came down to this wick level right here of 264.43, that would be your take profit level, roughly around there. You don't have to take it to the tick. You can take it a little before. You don't have to get to the exact bottom, so on and so forth. That's one way to do it. I'm going to take profits here if it gets down here. And now you have a good range. Now, NVDA does have a range right now. And it seems to me like if this, whether or not this, like if we deleted all this, we could go and say like, I don't really like doing this because it's all my good levels, but we could go and say that like, hey, this right here, clear downtrending resistance. We didn't quite touch it here on this second touch. Maybe we're coming down to make a double bottom. Do we finally break it? Will it get enough momentum at that point to break the 270 area? This is a key resistance right now is 270. And otherwise, what's the lower end of the range right now? The lower end of the range is like roughly 264 based off of candle body closes, not wicks. Maybe even a little higher. I always go off of candle body closes. So right now, if we don't look at trend lines, we know that when NVDA comes down to 264, we could potentially put in a long. And when it comes up to 270, we can put in a short. And it could just continue to do this. But then at the same time, sometimes that can be wrong. And you can come up here and you can actually break out, or you can come up here, flag underneath it for a bit. You think it's a short and it actually explodes through and back tests it. And that's where you need to know to get out of your option trade. It's not always just as easy as picking the level off of the channel either. Like you can do that for sure. If you memorize specific levels, you can pick, a level that you know that you want to short that. And if it goes above it, I'll stop it out type of thing. But really, NVDA has struggled up in this level. So I'm waiting for the confirmed break of one or the other ends of it. Lately, I have been looking for a break below this, and I've been expecting it to come down here. But the past 2-3 times now, it has not. It's making lower highs, but now it's pretty much tested this 264 over and over. Could it be making some kind of like flat bottom setup here? That's very possible, and that's something that I'm going to be watching for tomorrow. But that doesn't mean that it has to happen. So it's also like as of the end of the day here, based off of where it closed, we'll have to see where it opens. It made a high. It's making a higher low potentially. So this could be the first bullish signal that NVDA has after multiple tests of this range, the buyers have not wanted to let it fall below. So that's something you think about here. So tomorrow you can't just come in and be like, oh, this guy on YouTube said short 270. I mean, you can try it, but I always look at the 1 minute. Like I go over here and I just kind of look at the price action. And here's another key thing if you're not familiar with like watching the smaller time frames or just in general trading options, is I'm not jumping the gun first thing in the morning on open at 9:30. I'm not coming in like, all right, this is what I'm going to do today. I'm shorting this, and I don't care what anybody says. I'm shorting it. And then boom, trade option, and then boom, before you know it, you're down 250 because you're wrong. I'm going to let the market tell me what it wants to do. And that has been the most profitable thing for me, is it's not choosing which way do I want the market to go. It's not choosing which way I think it's going to go. It's which way is the market choosing to go today. Today, it could be short. Tomorrow, it could be long. You really don't know. And sometimes it's a scary thought not knowing, because I get nervous every morning. Like, I've been making very nice trades, and I don't mean to like be cocky or anything. It's how it's been working. This is what strategy has been working for me very well. I haven't, knock on wood, I have not lost a trade in 3 weeks. I've made every single trade profitable. Maybe one loss. Maybe it wasn't 3 weeks because I did have that SPY loss, but that was the only one. And that was because I was trading on FOMC day, and that was kind of, I should have probably not did that, because it's just, I never really traded like the way that I do on my strategies on an FOMC day. So it's like hard to know what do stocks do. And now that I realize how crazy an option trade is, if you've ever been in an option trade on a FOMC day, your stock, okay, say you're in a specific level, you're in a good ass level, and the stock only drops like 20 cents. Bro, your option can be down $100 all of a sudden out of nowhere, then up $100 out of nowhere, then down $70, then up 55. It was absolutely intense when I was trading SPY on FOMC. And I was like, this is too high risk. I got to get the fuck out. And honestly, when I did try to close it, you guys know what happened. I got caught up and ended up down 200. And that was just, it was not for me. And I should have known when it was starting to do that. So anyway, so in NVDA, I am watching the specific channel, but I'm also watching the specific like trend idea. But I like flat supports or flat candle body areas way more than I care about trend lines. It's just there for me to potentially see a break and maybe give me a little bit of a incentive on which direction it's going to go, but still it's always flat supports that I like. So what I mean by that is, if this came down and it broke this trend and it's going below it, does that mean that I'm going to short it because it's rejecting this trend line? Not necessarily. I'm not going to care as much about the trend line as I'm going to care about this specific yellow line price. I'd rather see price come back and retest this and show me that the sellers are agreeing than just going by a trend line and then selling here and then all of a sudden it blasts back up, or whatever the case is, depending on where it breaks. Like if it broke, say, over here and you're going like this and you're like, ooh, my trend's working, I'm going to sell that. I don't think I'm going to sell that because I want to wait for the confirmation of this retest. If it comes up and just blasts through it, now I know that, whoa, what the hell? You know what I mean? You get screwed. I hope all this is making sense. I know I'm rambling a little bit, but I just want to come on because I don't know how many people on my channel trade options. I don't know how many people like watch this because they're like trying to learn to potentially day trade or what the reasoning is. But I see there's a few people that watch my channel on the regular. I don't know who they are, but appreciate you guys for sure. But I just want to teach people as I'm teaching myself and learning as I go here on how can we make profitable decisions. And that's one of the key things that I was just talking about a little bit ago, was when do I get into a trade? And it's, for me, I'm watching from open at 9:30, and I don't even have to technically watch it because I can just come back at 950 or 945 and take a look at a 1 minute and say, what has price done so far? Like Tesla short today, I didn't make a shit ton of money on because I just grabbed like a, which if I held it all day long, I actually would have, but I was way more into my NVDA trade because I spent like, I don't know, $840 on the option. And on this option trade that I did, I opened a Tesla, like say 187.50 put. It was probably only costed like, I don't know, $140 or something. It was a cheap one. Like normally when I trade Tesla puts, I'm spending $800 or something, you know. And those are the ones I'm going to watch because they're going to be pretty profitable as long as I'm doing it properly. So with that put, I honestly just closed it when it hit like 193, 194. It wasn't here, sorry. It was this first drop, was it? Yeah. So I opened it like literally up here, the 97s, and I closed it like here, which if I was watching it more regularly, and that's the other thing is like, it's very challenging to get into multiple trades at one time in the beginning, at least for me, you know, everybody's different. But for me, like, that's why you see me on here with just 3 stocks that I'm always watching, because that's how I've noticed I can be way more successful in the beginning here. And as you get better at trading, you can start to do and manage multiple trades. But in the beginning, I think it's the smartest decision to get a stock that you know moves a lot. Like Tesla moves a lot. NVDA moves a lot, but they're both very tricky because they'll move a lot. I guess that's the key. They move a lot. So to me, NVDA is a little bit more tricky than Tesla, but that's probably just because I've watched Tesla for so long now and I've seen all the same shit. So I'm like kind of getting used to the price action, where like Nvidia, I've probably lost more than I've won on Nvidia in the past just from trying to, short random things that I'm like, oh, this looks like a topping pattern because of this rising wedge or something. Well, I don't do that kind of stuff as much. I'll use it as a guide and then I play off of my levels. So that being said, like Tesla this morning, I came in here. This already happened. Okay, so 9:30. Let's see. Was this 9:30? This is Monday. Boom. Giant pump up. That's another thing, okay? This is something to consider as well. If you know a stock, right, and you know its range of the day. So let's use NVIDIA. I'm not opening the chart right now. I know I'm doing more talking than charting, and I apologize. I hope you guys are still here. Appreciate this. If you are, leave a comment down below saying I'm here still or something like that, just because it'll be funny for me to see that you're still here, or if nobody's listening to this still. But if you know that NVIDIA was this more, like say at close, it was at 265. Now you go in the morning and it opens up and it's at 269. You have to be like, okay, well, this stock gapped up. Now there's 2 things that can happen. It can gap up like this and have to come back and fill the gap. That's not guaranteed. Don't ever trade like that. Don't ever think it gapped up so it has to go back down. That's not how you think. You either think one of 2 things. It's a very strong stock right now. This might break out today. If NVIDIA is at 270, 268 something, you might have to think this might break out today because it gapped up. It's looking strong. Then you come in and you go, this could be a good short though, because it's at a key resistance that I marked out or whatever the case is. I'm going to watch price action and see what the buyers and what does the market think. So this gaps up today, and most people would think this is a long. Now, I know from Tesla and trading Tesla that like it had a key resistance area at this same range. One time it gapped up, it was above 97, then that's holding it as support all day long. Previously, when it pops up, usually it rejects off it and it crashes pretty good. That's just from previous knowledge. But you can also look back in the chart to the left and see what's the range that Tesla trades. Another level is the 95.58, which we've watched for a long time, but it hasn't been as significant lately. This 97 was more significant last time. On the second rally here, it was significant. Or roughly, it didn't even quite make it there. And now it's making another lower high here. Whether this pattern that I have drawn in here is legit or not, but needless to say, does Tesla come back down here and need to test another low here, like where it did last time? Will it come down here, or will the low that it put in here be enough? And we talked about it on the channel when Tesla was chopping in this range. Here, I said, I think Tesla's coming down to 190 today. And that was based off of the fact that 190 was a strong level of support, but then also just, like, there's not much room. There's not much in here from 95.58 to 190. It's a pretty big range. There's no support, in my view, right, from what I've traded. There's no real support or resistance in between here. I never, in all my time of trading Tesla lately, I haven't found any support and resistance between 95.58 and 190. So that's just what I know. So, like, it's almost like this is an easy short, because you know that, like, you could have just taken it down here, and I could have did that too. But like I said, I just wasn't watching it when I closed it here, because I was just focusing on something that I had more of an investment in at the time, which was NVIDIA. So the point of all of this ramble was, in the morning, you watch price. If NVIDIA is doing something like this, where it's just chopping around at that 270, and you're see how I have this mapped out. Pretend this is like NVIDIA, or maybe we can go to NVIDIA right now, and maybe it will show me a similar setup. It doesn't have to be NVIDIA. Like, we don't have to trade NVIDIA tomorrow. We don't have to trade whatever it is that you're trading, though. Like, it doesn't have to be these. It can be any stock that you're in. This area here. It's not as clear, and it was harder. Like, I didn't get this put here because it was hard for me, because I have this marked out up here at this 270. So as I'm seeing price come up here, it makes like a little small double top here, but it's like wicking off of here. And then it comes up and it's making an M pattern. You can see this M pattern, but it went higher here on the right. So to me, that was like more of a bullish sign than a bearish sign. So I wasn't going to just come in and short this level because it rejected it and had a pretty good fall. However, it did come down here and it rejected this area here, which before this morning was a previous area that it was wicking as support. It broke it, whatever. That's 268 down there. We could mark that out too. Came back up, it held that as support. It came down and it rejected it here and it fell. So that to me was like, whoa, NVDA is actually really weak today, because normally this would have fallen, coming back up, tested this again. I would have shorted it here, but instead it couldn't even make it there. And then it fell again. And what else did it do? It broke this low right here where it last couldn't close. So that was like the signal for me. Boom, back test the previous range. Here, came down, couldn't close a candle body below. Here, back test makes a lower high, previous range, drops, breaks that low. So now I'm like, whoa, is this going to be a short? Now, I didn't put this yellow line in here till just now, of course, but I was like, damn, this is a strong level right here. That showed me it, that the sellers were like, this is the level I want to short. So when it comes back up, now I can say, I can safely take an option in this area, because it's just something that rejected hard before. And once you add in these areas here, you can, now like, you have to play this potential of it coming all the way up here. If you could have spotted this and got in here, of course, this is way less risk. So that's something to watch for tomorrow, is way less risk when you get up in the 269s, 270 area. Then you're only risking 50 or 40 bucks when you're wrong if this pops through. If this thing blasts through and it's a big ass candle, it doesn't mean like your idea is completely wrong, because you have to see a confirmation if you're watching a 1 minute, right? The price will almost always come back and back test to show that that's proof that it does want to control that area now. And if the buyers decide, oh, I'm going to step in here and start buying this area now that we're broken through, and the market is all saying that they want to do that, you're going to see price controlling it. And not only are you going to see it chopping around, but the key thing that you're going to notice is where are the candle bodies closing whenever they make a red candle. And is the next candle opening above or at the same price as that candle close? And that goes with both ways. That's why we always talk about candle bodies. And that's how you get confirmation. So if you're watching a 1 minute, you can see the candle body closing, proving that it's not closing above, or if it is. See this? Wicks come up, which means the body did come up at one point, but then it sells right off and it closes back below. Same here, body bought all the way up. People start getting trapped thinking it's breaking out. Body sells all the way below. Same thing here, closes below. That's like a pretty good signal right there that like, hey, that's a pretty good level. I'm going to keep an eye on it. Same with like Tesla. I think it was doing the same similar thing with the 7097. Like people, you know, I listen to, so every morning I come on and I listen to Benzinga pre-market prep, and I listen to them from 8 o'clock to 9 o'clock. And then from there, I switch over to live trading TV. Now they do day trades with shares, and they'll be in here and out here all in the same candle of a 1 minute pattern, 20 cents. You know what I mean? You have to take it with a grain of salt. You can't listen to their trades unless you're doing that. But you can get a pretty good sentiment idea just from watching them, both of those channels, on like, what do they think that the market's going to do today? What is their expectation? Are they coming in here looking for longs right away? Are they coming in here looking for shorts right away? And you can also get a pretty good like sentiment idea from them. They're very, 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 very smart when it comes to that stuff. So that also, I think, might, help me with my trading. And anything that helps you with your trading is very beneficial. So that's my tip is, if you guys ever listen to them, let me know down in the comment sections below. But so that's the first thing. Now, the thing about that is that they're not always right. Like, they can have a different view on something, and then 2 minutes later, they have a different view and they're shorting it all of a sudden. So, I like them. I won't trade off of their ideas. But, this morning, one of them was saying, like, Tesla looks like it's going to blow through this 97. They're like, it's going to break out. Now, it's smart thinking because you have this huge bullish move. So, yeah, maybe you're going to think it's going to continue. So, as I'm looking for shorts, they're thinking long. It's kind of like, does fuck with my head a little bit. I'm like, oh, shit. They're thinking long. I'm going opposite of them. They're usually pretty good on, but I'm like, I'm not going to let their views change what I see. And I was like, maybe they're going to be right. But needless to say, it did play out in my favor. And it ended up being very weak today, one of the weakest stocks of the day, to be honest, that I probably could have made even more money on, but I made a good amount of money off NVIDIA today anyway. And I have been making pretty good money off of Tesla, but it's just kind of in like an area for me that I'm not too confident on Tesla, which is why I'm not trading it too much, because I'm like, it's below 200, but it's above the 86s. So I'm like, I could trade it between here and here. But anyway, that's why I only took the small little play here, there to there. But I'm not sure what my plan will be for tomorrow, but we can look back at Apple real quick if anyone's still here. Leave a comment down below if you're still listening, or hit the like button. Leave a comment down below saying stocks are awesome. That'll kind of let me know in the comments, like, all right, people are listening to this long ass fucking video. So what is Apple doing right now? In my view, it can definitely be a very bullish setup that Apple's doing. Like, I know I shorted it a couple times, and I've been playing the shorts. But then at the same time, Apple could also be in a very bearish spot right now. So it's like, it's tough to say. Like, my overall Apple idea is for it to come to this 168. I'm not 100% confident on how this market's going to do. Like, I don't know if it's going to be a giant short soon, or if it's going to be something that's going to fake out all the bears. So I'm like just trading ranges. But Apple definitely has a key thing going here. We're on a 15-minute, and this 158, is it 158.20? I have to look, and I like to confirm it with a 1 minute too, because like you can see a 1 minute has traded below this level. So on a 15-minute, technically speaking, if this continues to hold price below 158.20, which I don't know where it is pre-market, post-market, but this could be a level, but I don't want to short off of that, which is why for me, I like to look at the 1 minute, because I can be more confident that if we break through 158 or 157.94 and we start closing candles, 1 minute candle bodies below that, that was the lowest price that Apple has been to within this whole trend. Just about, like, we've had candle bodies close below. See, this is a candle body closing below. This is like, here's a good lesson. So if you're still here, you're getting another good lesson. If I haven't already gone through this multiple times throughout my stuff, I'm just trying to like teach someone what I do and like how I trade, because I feel like it's just working so damn well. I want someone else to be able to pick this up. So your first initial thought here, because we just found that pretty good level. Now you could bring this level to, we could even bring this level to here to be even better, right? Let's say that, because I've seen this body. Yeah, that's the thing. When you scroll left, you can find an even better example of where could price go. You don't want to be faked out at all. So this is limiting so much risk and so much problems. Originally, it looked like that was the key level where we just had it, 58.94 or whatever it was. But it's not the level for me. It's that candle body that closed down here. So even though it might miss me 20 cents or something, to me, because this happened over here where the candle body could not close below 57.76, if price breaks and closes below and comes up and back tests it as resistance, it'll be a great short, and it'll probably be a very fucking profitable short. But what you need to know is that if we do wait to short Apple all the way from down there, is that means that it's potentially possible that price could still rally back to this point right here. So you'll have to watch. It's always good to have multiple areas. I know it's kind of confusing. It's kind of hard to be like, well, if we break that level, it should just not go back above it, right? And sometimes that's the case, but other times it's not. So that's where it gets a little confusing. So if we see price break this and start resisting off it, we also know that price has been down here before. So in order to really confirm ourselves, we need to see it break below that. Now on the back test, we have two levels to watch. If it does reject off of this level here, it's going to be very clear, because the candle bodies will not be able to close above. If you see candle bodies closing back above and staying above here, full bodies above, then you have to be like, all right, maybe this is where it has to go first. So sometimes you can get into a trade, early, because you're like, whoa, this market's looking like shit. I'm going to take this break. If it comes down here and it just bounces off of here and breaks back through, now you kind of have to think about potentially getting out. So I'd rather be on the safe side. So I'm just going to be watching Apple. It's hard. Apple's kind of a little more challenging because I don't watch it every day. So it's not the best example. I don't know if this made any sense to you guys, but what I do see is that 57.76 to me looks like a safer trade. So I'd wait for this to break, candle body close below, and then wait and see where does price reject, or where can price not control back above or close bodies back above. If it can't close bodies back above and it keeps closing bodies below, then now you know that this is the level. If it comes back and it goes to here and it can't close bodies below or back above, then you know this is the level. So I guess that's what I'm trying to say. Once you find that level, you can just slap a freaking yellow line on that candle body wherever it breaks down and comes back to back test. So technically right now, this could be one of those levels, depending on where it's at right now or where it is pre-market or whatever in the morning. I don't know how Apple's going to play, but I am watching something brewing here, and based off of what happened here, this looks like potentially it came up and it rejected hard, and it might be at the low end of the range to the point where either it double bottoms and it comes back up here to retest this, or it's actually weaker and it's looking to have an actual breakdown tomorrow, and that could actually set Apple up for a breakdown of a potential descending triangle, which could give you a target like here. Descending triangle is a flat bottom breakdown, and it could give you like a downside target based off of this. You don't really have to like use this, but it could give you a idea of where it could be going. And look at the targets perfectly with where my support was. But my first area for me is that 56.40. So then that's where it comes into. I mean, there's so much. This is going to be a long video, so I can't like do everything. But if you took this breakdown, you have two ideas now. Do I take my profit at the 56.40? Or do I hold it all day? And if I'm going to hold it all day, then that's where you have to say, if it comes down here, it's going to bounce off of here. And where is price going to go to potentially to reject again? And if it doesn't reject, then I'm getting out. And what am I going to lose for profit? So if you're in Apple and you're shorting it here, and you're not going to take your profit here because you think it's going to come here, then you have to figure out, okay, we broke this level, key breakdown area. Apple should not get back above there. It could bounce here and rip back up, but it should not get back above here. If it gets back above here and starts closing candle bodies above, my idea is wrong, and I close for break even or even a little small loss. That's the risk you're taking to bring it down here, because that's how price action works. It comes down, it bounces off a key area, and it rejects off the last breakdown area or just below it. And then the next move could happen where you go lower, and that turns into an all-day trade. If you have enough money to short this, take the profit, wait for the retest, short it again, and then bring it down lower, and then add to your short, then yeah, you're going to be crushing it. But if you're like me, who doesn't have like a bunch of freaking money, like I'm growing my account I've been growing my account for a while. I only put $500 in, and I've been growing it and growing it and growing it for weeks now, and it's getting up there. But I still don't quite have enough to like take 5-6 trades in a day. I can take 3 usually. But this video is getting very long. But if you guys want me to do another video like this, maybe shorter or maybe more in depth, or take lead where we took off here, if you have learned anything, let me know below. Hit the like button. I'm all done. I'm rambling for a long time. If you guys want me to go into more detail on this again, let me know, and I'll make another video like this. But you guys have to like comment and actually let me know. So if there's an individual person that's literally sitting here watching this to the end, fucking you rock. And let me know if you enjoyed it or not, and I appreciate you. Peace.